Well, in the last 2 years, you pick up any major research report, all of them getting centered around expectations of a very strong growth in India's insurance sector. Now, two important things to note here. A, this sector is already growing at about 15 to 18% each year. And B, it's not a small sector by any means. Just in FY24, the insurance companies in India collected a total premium of 7 lakh crore. Now, as far as the reforms are concerned, there's another very common thing amongst the research reports coming out. They all list the regulatory reforms in the last couple of years as one of the top 3 reasons driving this change in the industry. Today, with us is the man behind, a lot of these reforms which have brought such strong changes in India's insurance industry. Mr. Debasish Panda, the chairperson at the Insurance Regulatory and Development Authority of India.
First of all, thank you for understanding and appreciating the changes that have been brought around in the insurance sector. I think if you look at the Indian context, yes, the market is growing. Insurance, there is a felt need for insurance, even growing also across sectors. And therefore, and it's also true that insurance was a low priority need. But in recent times, we have seen that there's a rise in the per capita income. The middle class is widening. The purchasing power has got enhanced. The millennial population who understand risk and insurance better are keen to buy insurance. All of this also has led to the share in the discretionary spend increasing. And that is benefiting also in terms of spending in financial products, which includes insurance. We have also seen that the sector has got, particularly the health sector or the health segment, further impetus by the COVID-19. Overall, the financial awareness is on the rise. Yes, much more to do, but yes, it is on the rise. Now, the second thing that is happening, what is or necessary to be done, is that the industry now needs to harness the economic and the demographic shifts. And also simultaneously, you have to instill trust in insurance in the minds of the policyholders or the prospects. And that could be only done by creating a delightful experience for the policyholder. I mean, it should start right from the solicitation till the settlement of claims, the entire life cycle of the product. So what have we done? What was necessary to be done was to facilitate the insurance sector to create such an experience. The regulatory framework has been made more enabling and more supportive. And the foundation of insurance for all rests on making insurance simple, making it available, making it accessible, and also, most importantly, making it affordable. So how we have done this, I would actually put it in 4 blocks. Allow me to answer this question so that the context or the perspective is set. So what we did was we divided our goals into 4 building blocks. 1, to refine the present. 2, leverage technology and data. 3rd, how do we reach out to the last mile, the last household and the last person? And how do we make ourselves future ready in order to achieve the vision of insurance for all by 2047.
There's a lot of criticism, of course. There are, of course, things like, 60% of the healthcare expenses still happening out of pocket in India. More than half of the vehicles still not having a valid motor insurance policy. Accident insurance policy probably being the last priority for small and medium enterprises. What would be that one line that you would want to, tell your critics or the skeptics here of this aspiration of insurance for all by 2047?
First of all, we have to be aspirational. We are a huge country with a population which is young. So we have to have aspirational targets and goals. But as I just answered, why we are confident that we will be able to achieve what we should be achieving, that is insurance for all by 2047. We have worked to a plan, we are working to a strategy. So the ones I explained just now, those 4 pillars, that will take us to insurance for all by 2047. And just to repeat, refining the present, that is the new architecture, the regulatory architecture, then leveraging technology and data, third, reaching out to the last mile, and fourth, by being future ready, because we have to also make sure that the sector remains stable at all points of time, the policyholders' funds are protected and kept safe and secure at all points of time. So all of this are going to pave the way for insurance for all by 2047. And I'm pretty confident that with this roadmap, we will be able to reach there.
Certainly, that's a very positive note that we aspire to achieve. But if you look at the sector today, there are about 27 life insurance companies, 25 general insurance companies, 7 health insurance companies. In your understanding, to cater to a population of 1.4 billion people, do you think the sector needs consolidation and larger, insurance companies, lesser and larger insurance companies? Or do you think we need a lot many more insurance companies of different sizes right now?
See, I think it'll be a combination of all. The market will churn. There'll be eventually consolidation will also happen. The smaller ones who may not achieve the scale despite having been there for a sufficiently long period of time in the market, there could be consolidation. Then at the same time, you will see new players entering into the field because of the strong economic growth of the country, the revamped regulatory architecture, that thirdly, the purchasing power being enhanced, the widening middle class. So all of these are drivers of growth, and it's bound to happen. And we see that there is a lot of interest being evinced by the global investors to come and invest into in the Indian insurance industry.
Out of 27 life insurance companies today, only 5 are listed on stock exchanges, which means they've gone public. Out of 25 general insurance companies, we just have 2 companies which are listed. What would be your take on insurance companies going out in the public and listing and making people a part of their growth story as well, especially for the companies which have spent some time in the industry and are sizable in terms of the kind of business that they do?
No, I fully agree that, you see, listing would be a natural progression. Once you achieve the scale, size, or the age, you got to list the company, and it should happen. Listing also brings in a lot of benefits in terms of better disclosures, more value for the policyholders, more value for the investors. It would enhance the customer confidence. It would, even open up access to raising more capital, and it would support growth, innovation. So all of that follows with the listing of a company. So the number of companies which are listed, in life we have 4, in general we have 3, in the standalone health insurance space we have 2, and the recent one, I think today, Niva Bupa is getting listed. Then we have 1 reinsurer. So yes, the total number is 10 at the moment, and we are in engagement with the industry that once, the criteria of either the age or the scale criteria, and we are nudging them to go for listing. And I expect that you will see in the coming months and years more companies, going for listing, or at least preparing that roadmap.
What is the criteria in terms of age? Should it be 10 years, 12 years that the company should consider listing?
No, as I said, age, you also look at the scale. Maybe you look at the AUM, what is the total size of the AUM for life insurance. So it's not one or the other, but we will look at all of this and then shortlist that these are the companies which are ready to go. But you also see people, there are companies who haven't attained that age also have gone and listed. So the whole idea is to keep nudging, but those who have attained size, scale, and also the age should go for listing. So that is what we would be doing in the coming future, and we are already started engaging, and we'll have more intense discussions also on that.
One question as far as the foreign direct investment in the insurance sector is concerned. Now, when the FDI was raised to 74% from 49%, that did not garner a lot of interest from foreign players. Now, what do you think? What is your view, the regulator's view, on increasing the FDI limit in insurance from 74%? Should it be taken to all the way at 100%? And do you think, are you hopeful that if it is taken to 100%, there will be very strong interest coming from global players to have their own insurance company in India solely by themselves and hence bring a lot of foreign capital?
You see, FDI, obviously we will look at FDI because you need a lot of, this is a capital intensive sector, as you understand clearly. And insurance is not different from the banking or any other sector. Rather, the insurance sector is about 400 to 500 times more leveraged. So now, given that the insurance sector is poised for a substantial growth, and you yourself said in your opening remarks that they are growing at from between 15 and 18% growth annually. And there are certain reports also, there's, I think, the Swiss Re report, which clearly says or forecasts that the insurance premiums in India will rise by more than 7% in real terms over the next 5 years. And that would outperform the global average of 2.4%. And for the emerging markets, it's around, I think, 5%. And for advanced market, 1.7%. So if that is the kind of scale and size in which the Indian market would grow, obviously adequate growth capital will be vital to harness this potential. So therefore, if we depend only on the domestic resources, so then the crowding out effect will play out. So therefore, we have to perhaps look at FDI also, and if 100% FDI is allowed along with the growth capital or the required capital, it will also bring in global expertise, it will bring in capacity, technology. So all of that will definitely bound to happen. So perhaps this has become the opportune time for having 100% FDI. So what will help potentially to the 100% is that it will play out in the sense now the players will come with 100% FDI. They can plan their business independently. They can decide on their growth plan. They can decide what kind of business they want to write. They can infuse the capital very promptly and easily because they don't need to depend upon their domestic partner. So all of this will also be a concomitant benefit which will accrue. And therefore, we need to perhaps think about. But however, I'm sure that the government will take a decision on this at the appropriate time.
I want to ask you one question, which is around the news that recently appeared. The group of ministers on GST, suggesting removal of GST when it comes to health insurance as well as term life insurance. Now, especially health insurance as a portfolio to companies, the loss ratios there are increasingly increasing. Even if the GST cut comes through, and the benefits of that GST cut, let's say in a situation, are not passed on to the eventual policy holders, as a regulator, would you nudge and ask insurance companies to give full benefits of the GST cut, a potential GST cut or a removal of GST on health insurance to the eventual policy holders?
I think that we'll be able to react when it happens. But typically, these decisions will happen at the government, considering that whatever cut happens, if it happens, then the benefit passes on to the customer, right? So obviously it could be implementation of the new GST rates sans the ITC, which is the input tax credit. Then the entire benefit passes on to the customer. So it'll be good for the sector in the sense there may be a big impetus for health and life term. So, however, I'm sure the government will take a decision in the overall interest of the public and also the economy.
Three most important things, Chairpersons, are awaited in the Indian insurance sector. The first one is, of course, composite insurance license. The next one is risk-based solvency. And the third one is IFRS. Out of these three, composite insurance license is, of course, in the hands of the Parliament in terms of a final approval. But the other two are in the hands of the regulator. I want to understand the timing on these two things. One, do you expect the composite insurance license, the approval for it, to come in the winter session of the Parliament and for it to be applicable from 1st April 2025? And the other two things, IFRS and risk-based solvency, those are in your hands. By when do we see them getting applicable?
So the first question you have yourself answered. So I will not go into that as to when it will happen. So as far as the amendments are concerned,
your expectations, sir?
I would expect the moment it comes, it is welcome. The earlier, the better. So that is something, will be known to all of us as and when it happens. The second issue regarding the risk-based capital regime and the IFRS, and also I said a risk-based supervision framework, which we are trying to establish for a more robust and resilient risk and prudent risk management framework. So we are in the middle of the journey, in the sense the first qualitative impact study has already been completed as far as the risk-based capital framework is concerned. The results are with us. We have recently had a meeting only 2 days ago, the 11th and 12th, with the life insurers, with the general insurers, and all the reinsurers, to see the results and share the findings of those results. So we are, as I said, in the middle of this journey. We will be looking at a little more deeper into the various kind of risks that were factored in this first QIS. There may be a need to tweak them and bring in new risk parameters as well. And then the QIS 2 will be done sometime in the next 3 to 4 months. And so if I have to indicate a tentative timeline, then probably, I mean, it's not a hard and final one, because this will evolve. This is a very complex process. We need to take all the stakeholders also on board and make sure that the transition is also a smooth one and as painless as possible. But in the long run, we do understand that the risk-based capital regime is a more efficient way of utilization and allocation of capital. So obviously, everybody will benefit in the long run. So the timeline would be for the risk-based capital, a parallel submission could start in the financial year 26, and the full-scale rollout in the financial year 2027. As far as the IFRS is concerned, again, work is in progress. So it is more of a principle-based approach, you would understand and appreciate. So again, what recently we have commenced the gap assessment study. So the experiences were shared in the last 11th and 12th meeting that we had this November. And based on that, further work will start, or is already started. So what we are expecting, again, a very tentative kind of this thing I'm making at this point of time, not hard and fast, that the parallel run should start somewhere in 25, 26. And the full-scale implementation could happen in the year 27, financial year 27-28. So that is the tentative timelines that we are trying to set for ourselves, along with the industry partners. And as far as the risk-based supervision framework is concerned, 25-26 is our target, and somewhere in the financial 25-26, we would like to start rolling out the risk-based supervision framework.
We just have one domestic homegrown reinsurance company, that is GICRE. And what that does is that a lot of money, funds from India are still going to cross-border reinsurers outside the borders of the country. Second thing, what has been happening is that insurers are taking more and more, retaining more and more risks on their books. Does the situation of insurers retaining more and more risk because of lack of reinsurance capacity concern the regulator at this point of time? And to get more domestic homegrown reinsurance companies, what's the plan?
What has the regulator done? The regulator also has taken several steps to completely change the reinsurance landscape. One, from the ease of doing business, and two, also making it more attractive. How? Number one, we have, what we have done is that the cross-border insurers, the FRBs, the entire ecosystem now are allowed to obtain lead terms, and also the placement will also be made commensurate with the codes, and everybody will be allowed. So it's more of a level playing field. So while on one hand we are trying to increase the capacity of the sector, we are also trying to enhance the technical competence, parallelly attracting more number of players, and as I said, ease of doing business and also a level playing field. So obtaining lead terms, there were certain restrictions we have removed, and also placement. Also, we have eased considerably, meaning the order of preference which existed earlier for placement of the reinsurance business has been reduced from 6 levels to 4 levels.
Correct.
Today, after the GIC, which is the only domestic reinsurer, all the FRBs and the offices which have been established in IFSCA, Gift City, Gandhinagar, which are called the IIOs, they are at the same footing because they will invest 100% of the premiums within the country, and therefore they are given the same order of preference, right? So I think now the CBRs, the cross-border reinsurers, will get attracted to come to the Indian market. They will obviously get a better deal if they go to the Gift City IIOs, because there are some additional benefits that they will get. However, they can also come to the domestic tariff area given the new dispensation that has been provided, both in submission of lead terms and in placement of business, and they are being kept at par as far as the allocation or the placement is concerned in the order of preference. So furthermore, we have also revised the requirement of the capital, the assigned capital. We have brought it down from 100 crores to 50 crores. And furthermore, if there is a surplus capital lying in the Indian entity, then that can be repatriated so that it could be used elsewhere. That flexibility has also been provided, which was being demanded by the reinsurers. Even the regulatory returns and the application process for the FRNs, all of that has been rationalized and made easy to a large extent. So the entire ecosystem has been revamped, and that makes it more attractive for the CBRs to set up offices or shops in the Gift City or in the DTA. So we feel that going forward and in the months and years to come, we will see more CBRs coming and establishing their shops in India.
You've been at that position, and you've initiated so many structural reforms in the sector in the recent past. Your term ends in March 2025. Straightforward asking you this question: if the government is open to offering you an extension when it comes to the position of IRDAI chairperson, would you be open to accepting it and extending your term?
So that's a very, let me tell you that it's been a privilege and an honor to serve in this role, and with a wonderful teamwork at IRDAI and equal measure, the response of the stakeholders, I think we have been able to achieve what we have made in the last 24 months. So I think the momentum and the energy will actually propel the future growth. So we have collectively embarked upon the journey towards insurance for all by 2047, and I'm sure that we will be there, and therefore a lot of more work is required to be done. However, at the end of the day, I would say that institution matters, not the persons. So thank you very much, Yash.
Thank you so much to you, of course, to have this interaction with us on an important day. I wish you all the best for, of course, the changes that are in progress. We'll be keenly watching on some of these most important reforms and how they play out on the sector. Thank you so much, and appreciate taking the time out today for this important interaction.